Hi everyone, welcome back to another exclusive podcast brought to you by IronFX. Here at IronFX, we're dedicated to bringing you the absolute best trading education to help you take your trading to the next level. In today's podcast, we'll be talking about if could US inflation re-accelerate in 2024. Now, before we dive into this topic, what exactly is US inflation and what are the data points or metrics that we can track to get an idea of whether inflation is cooling, stabilizing, or re-accelerating? Right. So the more popular metrics that are used to track inflation is CPI and PPI. Now, what do these acronyms stand for? CPI stands for Consumer Price Index. So this tracks the level of prices for various goods and services in a basket. Now, this could be things like automobiles, houses, rent, food, services, and so on and so forth. Right? You get the picture. So basically, stuff that we buy daily for consuming or services that we purchase as well. Right. So this is what CPI stands for, Consumer Price Index, and this is those are the items that that is typically being tracked. Next is PPI. PPI stands for Producer Price Index. Now, this is a measure of wholesale inflation. So basically, this measures the level of prices in uh, the industrial sector, right? So now we know we're looking at two metrics, CPI and PPI. One that looks at the level of prices that are consumed by the consumer, and the other is the level of prices that is experienced by wholesalers or manufacturers and producers. Right, now coming back to the topic of a potential re-acceleration of inflation in 2024. Could that happen? Perhaps it can. Why do I say that? Because when we look at the inflation figures for the months of January and February, so that means when I look at the CPI and PPI data for those months, the data has actually come in hotter than expected. Now, what do I mean by hotter than expected? That means the respective data points have come in higher than the original estimates. Now, you have headline CPI and core CPI, as well as headline PPI and core PPI. Now, when we break down these various metrics on an annualized basis and also on a monthly basis, what we have seen or what we can see in the figures for the months of January and February is that prices have risen strongly on a monthly basis for both the headline and core readings for not only CPI but also for PPI. So that means consumer prices are picking up and so are prices for the wholesale sector. Now, this is not a good sign because should inflation continue pick up in the months of March and April, that means the Fed could be in a little bit of trouble, right? Despite signaling three rate cuts for 2024, they've signaled a total of 75 basis points rate cut for 2024. That means 3/4 of a percentage. Should inflation continue to be stubbornly sticky or even worse, re-accelerate, it really puts the Fed in a tough spot, right? Part of the reason that CPI and PPI is starting to re-accelerate is the fact that the US labor market is still very resilient. Despite higher interest rates, companies have continued to add jobs steadily when we look at non-farm payroll numbers as well as the ADP employment figures. Although the rate of growth is slowing down a little bit, but in general, we can see jobs are still being added uh, at an aggregate level every month. So this means that the US labor market is still resilient, and that means majority of the uh, people that are available for work are still employed, right? So those who are participating in the labor market, they are still being employed, and wage growth has also been increasing, particularly in 2022 and the first half of 2023. Wage growth has slowed down a little bit, but overall, the US consumer still remains strong because his spending power is still relatively strong as wage growth uh, picked up in 2022 to try and match inflation or in some instances even beat inflation. So because of the fact that the majority of the US uh, labor market are still currently employed, the wage growth is still relatively good, it means that they still have strong spending power. Now, all of these factors feed back into the economy. So, when US consumers continue to purchase goods and services, this could potentially then lead to prices re-accelerating as well. Right now, how could the Fed potentially react to such a scenario? Well, they are unlikely to raise rates, but we may see Chairman Jerome Powell and his fellow committee members try and jawbone the interest rates higher. Now, what do I mean by jawboning the interest rates higher? Well, we know, or we are not 100% certain, but we are pretty confident that the Federal Reserve is not going to raise interest rates any further. They are more likely to keep rates on hold, and by jawboning interest rates higher, I mean they could adopt a hawkish stance and drop very hawkish commentary and statements to the media. So, in a sense, they're trying to use their words, statements, and interviews to try and push up or keep bond yields elevated, which in turn would keep the value of the US dollar up. For perspective, the current or the Fed funds rate currently stands between 5.25% and 5.5%. Right. So as we progress into towards the end of the first quarter of 2024 and we head into the second quarter of 2022, should inflation pick up in a more meaningful way, we can be quite certain that the Fed is not going to raise rates, but they may adopt a much more hawkish stance. So we could see them react in this manner. Right. So should we see a very hawkish stance by the Federal Reserve in the coming months, it is likely to keep bond yields elevated, which also would provide very strong tailwind for the US dollar, and we could even potentially see a resurgence of the dollar bulls. So this is what could potentially happen over the next few months. So how could we keep track of this? As I said, the major metrics to track are the CPI and PPI. So let's see how the data evolves over the coming months, and we should be able to anticipate how the Fed is going to react. Right. Okay. So anyways, that's it for me on today's podcast on the topic of could US inflation re-accelerate in 2024. Do remember to subscribe to all our podcasts here at IronFX, where we are dedicated to bringing you the very best trading education to take your trading to the next level. Until then, stay safe and trade safe. Thank you.